What's up, guys? What's up, guys? What's up, guys? What's up, guys? We're back with another one. Long overdue, long overdue, long overdue. It's actually been a while. I think more than 4 months now. We're still trying to restructure the business and everything like that, but for now, we'll try our level best to consistently drop videos every now and then. Overall, same old, same old. Today we're just gonna be focusing on gold. It's been crazy. It's been crazy. Took a couple of positions, made some money here and there, but you know how it is. It's never really like what you call it, a linear type of progression or anything. There's always going to be up and downs and all of that. So without further ado, let's just get to it. I hope the audio is audible. I hope everybody can hear me loud and clear. So we're just going to be doing our CBDs. So those are our chat breakdowns. We'll try our level best to drop a video each and every Sunday, and then midweek, maybe let's say on a Wednesday or okay, we'll try um to drop something on a Wednesday so that we can go throughout trades that we took from Monday, Tuesday, and Wednesday, and then maybe Fridays before the market closes or after the market closes, in terms of just really breaking down each and every position that was taken. Yeah, so the first thing that you do, of course, as you can see right now, we're on the monthly chart. So here we really don't do much besides looking at where the market is going. I mean, right now, it's kind of obvious. Right now, it's kind of obvious, the market is going up. So there's not much you can actually do here, but then just look at what the market is doing. Look at the previous candle or the current candle that we have. It has like 2 days and 3 hours till it actually closes. So, of course, if anything, if we close with this exhaustion area, it'll let you know that we have some buyers in this market. There might not be a lot actually, there might not be like a lot of them or anything like that, but as we break down the chart, we'll slowly get to see what's really happening. But then, since this candle is still like will be open for 2 days, until I think until Wednesday or Tuesday at the time of this recording. So what will happen then is we'll see if it closes like this bearish engulfing. Then of course there's more buyers in the market than sellers, but also exhaustion areas kind of show you that as much as we have some sellers in the market, buyers try to say something. They didn't really establish their dominance or anything like that, but they try their level best to say that, okay, hello guys, we're here right now. And there's not much we can actually do here. But then let's go to weekly time frame. Same thing, but the first thing that I'm actually noticing is what we had a mini resistance area there. Not much, not really like a major resistance area or anything like that, but it's just a resistant area that you could obviously had paid attention to in terms of just looking at where the market is trying to go. So I'm pretty sure a lot of people took sales around this area, but then it is what it is. As long as you're making money, that's the most important part. So basically, before I go any further, we're just going to be focusing on market structure. Locating our higher highs, locating our higher highs, locating our lower lows and lower highs. Cause I believe that it's the most important thing in trading is that you need to know if the market is going up or it's going down. Sometimes it's easy to actually see there, but as you slowly break it down to lower time frame, it kind of gets a little bit noisy. So it's always kind of tricky to know exactly where you want to take a certain position, or where you have to actually put your stop loss or something like that. But then you, as time goes and you consistently in the charts breaking it down and learning and learning and learning, you'll find your own way around the market. So right, cool. We have this resistance area that we broke a long time ago, of course. Cool. And then we came back to test this area. Now it's newfound support, so it's no longer a resistance area. Here it was, of course. Let's highlight that with a yellow ellipse. We'll just make a yellow ellipse list so that we can, you know, yeah. Hopefully each and every single thing is visible. So yeah, we broke that, and then we came. You see, these sellers were really, really, really aggressive. Also, one thing that might make them kind of aggressive would be what we reached new highs. We pushed the market up to 5,500 and what's that? 5,596 $93. Sorry, let's make this black, and we can label this as what should we name it? Let's say new high, new highs. We won't say ultimate highs because the market is kind of crazy like that. It might break those highs again. When, we don't know. The best thing to do is to position yourself in a way that if ever the market tries to skyrocket up to those prices again, I mean, you in your buy positions, and you make you some money. Right, cool. So guess it's 5,600. That was a higher high, right? And then as you can see on this one candlestick here, I'll highlight that with an ellipse. Let's make it red. You can see there that as much as the market was super aggressive going up, people kind of started being, pretty much the market is run based on fear. People confident enough in the market going high, or they're kind of skeptical about all of that. So of course those are new prices ever, in terms of gold and all of that. So of course people are going to be, it's going to get expensive to buy gold at that price than it was, for example, around this area here. So it's gonna be a little bit challenging. So other people might be fearful of that also. And remember, we're trading with big institutions at times. You're trading with banks. You're trading with investment firms. Hedge fund managers. You're trading with people who have a lot of money. And so of course they might get to that area and be like, okay, now we want to start taking profits at that area. Maybe they bought the market around these areas here and there, and then now they're like, okay, let's kind of like cool off a little bit and secure some profits. And then of course, when that happens and a lot of people are taking profits in that area, or people are closing their position in that area, whether it's a loss or it's a win, what will most likely happen is that people are going to start like, um, well, how can I put this? People are going to start like, oh, buyers won't be there as much. So sellers will kind of feel like it's their time to actually come in the market. So you'll definitely see a lot of selling pressure whenever they reach those take profit points. And you'll never know if if the market is going to reverse at that area or anything like that. So your candlestick analysis is one of the most important things to also know. So we kind of highlighted like two things, right? So far I said market structure one, market structure, market structure, and then two is your candlestick analysis. So it's your candlestick analysis. So these two things, of course there's more than that, like your chart pattern recognition, your time frame correlation, and all of those other things, and a little bit of fundamentals at times, because I mean, right now there's these wars that are going on in the Middle East, and tensions and all of those other things. It's not a matter of actually knowing each and every single thing, but just keep tabs on that also, so that you know when to enter the market and when not to enter the market. Right, cool, let's move on. So um right now we had this we'll just highlight this as red as well. We had this doji candlestick, right? So doji pretty much, it hasn't it hasn't told us if the market is going to reverse at that point or not. What it just tells us right now is that, okay, there's kind of an imbalance in the market. The buyers are coming in, the sellers are also saying something, but right now it's kind of in an imbalance, so we really don't know what's going to happen. So what you do is you go to a lower time frame, which is your daily. Right now, as you can see, you start to see a little bit of more volume. Let me make this a little bit lighter so that we can see the candlesticks. Yeah, cool. Right now, you start to see a little bit, not volume, but you start to see a little bit of more um, the characteristics of the candlesticks, showing their personalities, really showing what's actually happening, how the market is looking at that time. So as much as, okay, you wouldn't be wrong to take a buy in this area right here, but also remember, this thing, as we talking about it, market structure, we had a support area here, right? All around here, support area there, a support area also here, but these ones were not really major. Our last major support area was this area right here, right at 4,700, 4,700, dollars. So we had a support area. And then what happens then when you get something like this? It tells you that we broke the support area, right? So it means there's more sellers in the market. As much as we'd be getting these buyers and all of that, it's also kind of giving you a little bit of like what's really happening in the market. Because also, let me clear this up. If you see, if you look at this area, one, two, this type of pattern is called a double top, which it kind of forms an M or something like that. So more than likely, that's a kind of a reversal type of chart pattern, whereby we'll be getting a lot of more sellers. The buyers might come in this area, of course. From here, they might come in, and we don't know how far they might be willing to actually push the market. But if anything, if they choose to break this support area here, then of course, now we know that, okay, now it's a bullish market or anything. Right now, we'll consider it slightly bullish, slightly bearish. It depends on actually what's, it depends on actually what's currently happening right now. So right now it's showing a little bit of bias. Not much, but a little bit. So as much as you can see, if you look at these two candles right here, let me highlight them. These two candles there, what's happening there is what we see: a bearish candle, you know with a lot of volume, by the way. A lot of volume. We see a bearish candle and then a bullish candle. That bullish candle came through and it had some what exhaustion around this area here. So it didn't engulf this bearish candle. But also, if you look closely, that bearish candle also didn't engulf this bullish candle of ours here that we made right here. So we have a mini support area there, right? Cool. Right now, it really doesn't tell you what to actually do in terms of what type of positions should you take or anything like that. Of course, we're still breaking it down, right? And go down to a lower time frame. Now you start to see a little bit of more action and all of that, and you start to see, okay, what's really happening, what gave us certain exhaustions in those higher time frame candlesticks and everything like that, right? So just for today though, just for today, so that this video is not really that long, we're just gonna be focusing on this area right here, right? I won't do each and all of these other ones. Probably, hopefully, if I do make time tomorrow, I'll definitely record another one, just a full-on chart breakdown. Maybe starting around here, how you could have like taken advantage of all of these positions here. How could you, probably taken the buys here, got out here and take a sell here, get out here and take a buy here. All of those other things. All right, cool. So the first thing that I'm noticing here, as much as these buyers are coming in, I love this area right here, specifically because of, if you can see, it's a doji. Uh, I wouldn't say doji, but I don't know if it's an inverted hammer or something like that along those lines. And then we have a big ass bullish candle here. This bullish candle says a lot. It tells us the strength of the buyers that are there. Also, the previous one here also showed us that, okay, there's buyers. Then you pay attention, we had a bearish candle that followed, and then we broke that resistance, mini resistance area. Let's pull out our fibs. Point A to point B. You have to be precise about this, really precise. Right. If you can see, that's a 61.8 PRZ level. So taking sales at that area, you wouldn't be wrong, right? You wouldn't be wrong. Of course, let's go to H1 real quickly so that we'll see. You wouldn't be wrong actually. Obviously breaking it down to a lower time frame. Maybe let's say something like let's see, M30. Maybe it will look better. Yeah, better. What time was this candle? Okay. Let's make that green. And you wouldn't be wrong to take this or anything, but then it's not really like, a very like, I'd say an entry that's really like, I don't know why. How can I explain it? But it's not really an entry that you would really want to enter. It's not a position you'd want to be in, because of course we had a lot of buyer pressure coming in here, so you'd be looking for at least a break of a resistance area first before you take your buy, right? So cool. But in terms of the liquidity of gold, then you might have like taken that and made a little bit of money, not much, but a cool $1,000, something like that, close to, maybe, if not more than that, depending on your lot size, of course, also. Right, cool. We had this big ass bullish candle, and then we had some exhaustion. A bearish candle came through. Let me check this out. A bearish candle came through, and then some other candles following, but not much, right? And then we made our support area there. Let's go to H1 so that we can see. You pull out your fibs. Point A, point B, point A, point B, right? And then a 61.8 there, a 61.8, an entry there. It's a lovely entry, by the way. Could have taken this one. A buy here, your stop loss below this previous low. You take profit there at 27%. which is not a bad entry, if anything, And then eventually, if you pay attention, it broke our resistance area that we made here. So now it tells us what? A break of a resistance area might mean a bullish trend, right? So we broke that area. So what you do again is you pull out your fibs. You pull out your fibs, point A to point B. You wouldn't take all of these entries, all of this, all of this, all of this. You'd wait for the market to hit one of these PRZ zones. Here you might have taken that entry at some point. But okay, also even this one, there's a chance most of the time. I mean, it's like what time was this candle? It's like 3 a.m. 4 a.m. In South Africa, most of us are asleep at that time. Not unless you have a job that you have to, but most of the time, maybe not. This entry, maybe not, maybe yes. Or you could have gotten an entry somewhere around here. Let me clear this out. Somewhere around here. Which was this one was better. It's like, what? It's, yeah, 4 p.m. Cool. This one was better, right? So maybe this you might have, because it's a 38.2 PRZ level, you know. But if you take the L, that's cool. You come back stronger again. Maybe here it could have also taken an entry, then an L. Cool. We come back again up until even this. Maybe not, or somewhere here, or if not along these lines, right? Take a buy here, maybe get out here, or something like that. It depends on how you actually choose to maintain um, your trades and all of those other things. But then, if anything, yeah. So what we'd be looking for when the market opens is to see if we choose to break this area, this support area here, where it's like 4,378. If we break that area or not, if we break it, then more than likely we might be looking for sales or something like that. But if you look at your bigger time frames, I mean, it's kind of like it's still like bearish, pretty much. Still a bearish trend, if anything. That's trying to transition into a bullish trend. That might take a while actually, but we'll see what happens. We'll see what happens. You know. But for a continuation of a bullish trend, we'll have to break this area here. In fact, let me mark it with something different. We'll have to break this area here. Let's change the color, make it purple. Darker color. Cool. We might have to break that area, for continuation. And then what you do is you wait for a push, retrace, and then your entry should be right here. You wait. If this doesn't happen, you don't take an entry. Not unless the market continues with its bullish movement and all of that. Then, of course, you have to analyze your market, your chart again in order to get those sell entries and all of that. But more than likely, your market structure is one of the most important things. So let me clear my chart real quick so that I can show y'all some. Let's go to here, and then right. So it's simple. I think in one of the videos I've done this, but yeah. If you are a really, really, really technical geek, the Elliott waves and all of that. If you've studied that at some point, then you understand that the first wave will be long, the second one has to be short, and then the third one has to be longer than the first one, and then same thing over and over and over, that type of thing. But the most important part is what I'd say it's these areas, yeah. More especially in a downtrend, it's these areas, yeah. You know, on an uptrend, it's these areas, these areas. I call them 1,000 picks. You know, those are the areas that you look out for more than anything. If you are solely trading market structure, you know, because you pull out your fibs from point A to point B, you see, it gives you a 61.8 with a take profit of minus 27 or minus 61.8%, somewhere along those lines. Yeah, I understand. So also, you can sometimes take advantage of all of these counter trends, but make sure that you're at a point where you actually understand your candlestick analysis so that you don't get like faked out and everything like that, because it gets crazy, you know, more especially when you're trading gold and your US 30s. All of these are instruments that are really liquid, but if you just solely trading forex, then it's chilled, you know, the risk is not as much, you know, you can up your lot size as much, as crazy as you'd might want. But of course, it also depends on the account balance that you have. But then, anyways, um, not an easy video, of course, but also a little bit of some technical stuff here and there. But the most important part that we touched on in this video was a little bit of candlestick analysis and market structure, pretty much, you know. So those are really vital. Those are really vital in order to be a good technical analyst, you know. It's really important for you to know those things, you know, more especially if you're a person who has time and you get an opportunity to sit on the charts as much as you want. Then it gives you an opportunity to actually, you know, find opportunities on a day-to-day basis where you can be making money on a day-to-day basis. Also, it's important for you to understand risk to reward, you know. Your R&Rs, those are really important, those are super vital as well, you know. Understanding your account balance also, it helps in terms of knowing how much you have to risk in each position, you know. You shouldn't risk to a point where now you can actually lose your entire account or something like that. But otherwise, yeah, that's it for today's video. I hope we gave a little bit of gems, you know. If some things were not really like well articulated or anything like that, hit us up on the comments. Definitely we have our Instagram page. We're actually still working on that because the first one that we made, we kind of lost. So we might have to make another one or try to get the other one. But for now, let's keep in touch on the comments. We'll try our level best to be active on YouTube as much as we can, and then as the community slowly grows, we'll do webinars from time to time and all of that. But like we said, like I said in the previous videos, we don't do signals, none of those things, you know. But we definitely do have like well structured courses in terms of um, teaching technical analysis, trading psychology, risk management, and all of those other things, you know. So if you are interested in that, definitely hit us up and we'll make it a point that we communicate in the proper channels, probably Telegram or whatever we actually, you know, choose to. Probably Telegram, if anything. Telegram, maybe WhatsApp, maybe, you know. We'll make it a point that by the end of the week, each and every communication channel is set up. But nevertheless, guys, I hope y'all enjoyed the video. It's kind of time consuming to make these, but we trying our level best to equip each and every single trader in, well, around the world, you know, since it's also an interconnected world now in the times that we actually live in, you know. So make sure to hit us up, and yeah, cheers.